the channel. It's been like since last week since you guys heard from me. Alright, Precious Millennial Logistics. So guys, we'll be looking at AudCad today, right? We'll be looking at the AudCad pair. If you look right here, right, we're on the weekly chart, AudCad weekly chart. Like we always advise traders to start their analysis, to carry out the analysis on a larger time frame. So personally, I prefer analyzing on the weekly chart, then scaling down to lower time frames here to plot my entries, right? So on the weekly charts of the odd card here, what we have here is the charts here, as you can see, candlesticks and all that. So I have all the tools we're going to use here on the chart, so I don't get to go out of the screen and all. So guys, let's begin. On the odd card here, we can see a kind of demand zone or support level, however you choose to see a kind of support level here, or a demand zone, right? A demand zone formed at this level. Why, guys? We see the price here falling. It came into this zone, right? The price came into this zone after it came up here to retest this resistance level, the level around here, which is a kind of resistance level. Though there was a kind of a false, but this is too long. 2020, there was a kind of false breakout here, with a pin bar, and then it went up. So this is a kind of support level here, and the support level was broken at this point, so it became a resistance level here on the weekly chart, guys. But remember, like I said in our previous videos, right, I would like you to make reference to our previous videos. If you can see it down on the top screen, fine, where you find previous support levels, right? When they are broken, they become resistance levels. That's one. And then you also know that we use our moving average here to connote a kind of dynamic support and resistance level, right? So when the price is below the moving average, we assume it to be in a downtrend, right? So when it's in a downtrend now, the moving average there becomes a resistance level, right, to the price. So when the price breaks above the moving average, we assume that it has broken the resistance level, and now the moving average will become a support level. So from here we can see this kind of movement down here. I don't know, there's a kind of slow fall into this zone, right? And then when it got into this zone, like I'm talking about this zone here, the demand zone, right? When it got into the zone here, it just reacted a bit, went up, came down, and then it bounced off. So inside here, I don't need to go down to the daily time frame. I can tell that there's a kind of W pattern forming here. So there's a kind of W pattern formed here, a kind of double bottom formed here, and a double bottom is a bullish candlestick reversal pattern, right? So I think I entered this trade. I wanted to share it though, but I couldn't, because as at the time when I wanted to do the video, I was a little bit distracted. So I just had to just leave it, because the price stepped above the area where I was expecting it to be, and I think that was in between the week, and usually we don't drop our analysis within the week, right? So that's just it. But right here, but I entered the trade around here. I think I entered the trade here, and I got off it around this level here. Got off it here, I think at about 144 pips. Yeah. Also, let's head on. So on the weekly chart here, we have this very good demand zone formed here, and you know what happens when the price gets into a demand zone or a demand level here? It simply means that the buyers are very much active to take over the ride from the sellers. So the bulls have more power when the price is in a demand zone. And what do the bulls do in this sense? The bulls push the price higher, so they push the price higher. So this has been my watch ever since I got off the trade at this level. This has been my watch here, right, for the price to actually break through the moving average, which I was very confident that it was going to happen anytime soon, right? For the price to break and close above the moving average here. So today is a Friday and the market is closed, and we can see here that the price has broken and closed above the moving average. So guys, what are we waiting for? Fine, let's scale down to the lower time frame where we start doing things here. Let me bring this things somewhere here, because I'll be needing them anytime. So let me keep them close. Right, let me keep them here. Okay. So let's scale down to our daily time frame. Okay, so this is exactly what we confirmed, right, from the higher time frame. Yeah, you can see this kind of W pattern forming here, you know, it's first leg and the second leg. So you have the W pattern. Yeah, 1 2, it went up, it came down, right? So fine, let me do some adjustment here. Okay, you can see, let me do some adjustments. Okay, so the price here, right? So like I said, this was where I got off, around here, 144 from here. You see how right the market, guys, very crazy, you know, from around this level here. I entered the trade and I got off here. You see all these moves on the daily time frame. So when we show the trade receipts, you see them like magical ones. Okay, guys, so what am I expecting of this market here? First, sorry guys, let's go back to the weekly chart. Let me plot the level. So I'm expecting this market from the point where it is now to get to this point here, at least here, because here is there's a supply level here. Why is this a supply zone? As I when the market got to this area in 2021 by February, right? February this year. As I when the market got here, you can see this very big, huge move where there was a sudden move downwards, forming a kind of bearish engulfing pattern here, right? And then after this move, right, the market the next week went into that zone, right, and it couldn't break it, it fell down, and the market has been in a downward trend ever since, right? So this is a major area that's been marked up by institutional traders to be a supply zone, right? So in this supply zone here, the bears took over control of the market, right? People who know much about smart money concept and all, really get the idea of this. So we're expecting that when the price gets up to this point again, there will be a reaction. So this is our target from where the price is right now to here. This would be our target somewhere around here. So if we're to calculate it, we should get around where the market is now. We have the difference would be 828 minus 323, right? That shouldn't be nothing less than 400 pips or thereabout. So we can now scale to the lower time frame, guys. Let's scale to the daily time frame. I'm just gonna end at the daily time frame here. Okay, we have very long stuff here. So okay, fine, this is very good. This is very good. I need this shorter. I need to make this shorter. Okay, it has to be small so I can, okay, I can manipulate it. So okay, so what am I expecting from this market, guys? Let's get something straight, right? Let's get something straight at this point. Looking at here now, guys, this is where we need to be very careful, because we're planning the trade right now. We're not entering this trade immediately on Monday, but we're planning it. So there are certain outcomes that will determine if we take the trade then, or we'll have to wait a little bit, right? So like, our target right here is high, so there's enough room, right, and there's enough time for us to plan and execute the trade rightly. So we have this W pattern here, right, down here. But if you look at this level here, there's a kind of resistance here, right? There's a resistance level here. So I think the price is really acting there, because you can see a kind of little price weak rejection here. Price was rejected once here, and it tried to reach to that level, right? And even when it got here, it didn't break through. So guys, this is what we'll be expecting of this market. We'll have to wait a bit, right, till the price breaks above this level at least, right? We have to wait for the price to break above this level, at least above this level where the yellow line is. So if you're watching it right now, you could just write this price somewhere, in your journal, in your trade journal, or whatever you use to mark your trades, right? So waiting for this price, for this trade to actually break above this level. Now that's one case scenario, right? Now the second is this is what I'm expecting from this market, guys. This is what I'm expecting. One, I would like to see this market, right? I would like to see the price fall to this point. I would like to see the price fall. I'd like to see the price fall to this level here. Great. I'd like to see the price fall to this level, right? Somewhere around I would like to see the price fall to this level here. This level here. I'd like to see the price fall. I can't find what I'm looking for. Okay, we already have the mark of this stuff, right? So okay, so let me bring it down. So okay, I would like to see the price fall to this area, right? I think we have it right. Okay, so the arrow is coming down. I'd like to see the price fall to this area, right around here, then make a move to the upside. Now that's first case scenario, right? And then make a bullish move to the upside, right? So where is he making that move to, guys? He's making this move all the way to this zone. You see how it is right here, right? So I want to see, that's the first case scenario, guys. It mustn't happen that way, right? But so long as we get that direction right, we're going to be fine to ride the trend. So I would like to see the price fall down, right? So if the price falls down to this area here, the next bullish move that is going to make from this area will be up straight away to our target here, which is around 9830, right? Which is around 9830. That's the first case scenario, right? It may likely happen like that. Why? Because we have a neckline here. So first, before we enter the trade, we want to see this level broken first, right? We want to see this level broken, or we want to see a corrective move to the downside first, and then an impulsive move. So if this price comes down to this level, we will take advantage of the impulsive move and then go straight up, break above the resistance level that's here, kinda. That's the first case scenario. But if on Monday the price keeps going bullish, the price keeps going upwards, right? Let me remove this. If the price keeps going upwards, guys, then we have to wait for the price to break at least this level here, for the price to break above maybe 428 or 414, right? To break above here, then we can then enter the trade in the bullish bias, guys. So if you have any questions here, you can share your concerns in the comment section. Yeah. Aside that, if you like the video, share with your friends and all, and don't forget to subscribe to our channel, Millennium Logistics. Yeah, so you don't miss any of the content we put out through. And guys, you can go through our previous video to learn more. You can also see you'll see other analysis we made, and from there you can track the success. You can see the kind of little wonders we've been doing so far, the kind of the success we've been having so far, all grace and all thanks to the market. So guys, in summary, for the AudCad, our sentiment here is bullish, right? The long-term sentiment of for AudCad is bullish. The long-term direction, guys, is bullish. So in any other thing we're doing, in all our plans, in all our activities right here for the AudCad, the only plans we have for the pair is to buy, right? Is to buy. So like I said, let's make a recap. First scenario is the price may likely come down, fall down a bit, a corrective move, right, to this area here, and then when it does so, it will then go all the way up into our target. That's the first case scenario. Then second case scenario, guys, is that we're waiting for the price to break at least this level, right? At least this level, to break this level at least, right? That's if the price keeps going upwards without that corrective move. And if the price breaks this level, right, we then enter still in the same direction, bullish. So there's no need to rush the trade, guys. You just have to wait, because at any point you enter, you still have enough leg room to manage this trade. So then what do we do here? Guys? Now, in the area where we may be talking about our stop loss, yeah, we should have in mind that this, our stop loss, if this price should come to this point, should be below the moving average. That's, our stop loss could be around here. This is the daily time frame, remember. Our stop loss should be around here. Personally, I do advise traders to take at least a minimum of 100 pips stop loss, because there are disadvantages that comes with having tight stop losses, right? And we should avoid that, because the essence of every trade is to be in the trade as much as possible, right, and to give the trade enough buffer, enough room, right, to actually do what the market does before it starts heading in your preferred direction, guys. So that's all for now. So guys, in summary again, our sentiment for the odd card is bullish. We do hope that you love and enjoy our analysis. If you do, guys, if you don't understand anything, please do not hesitate to leave a comment in the comment box down there, or you can as well send us a message. But then like, share, and subscribe. Thank you, guys.